Hello traders, the title of the video is Elliott Wave Traders Tips and Tricks to Tame NASDAQ 100 Index. Alright, so I have been asked by a YouTuber of the name Rossi to record this video about to analyze the NASDAQ 100 Index. Alright, so that's why we are recording this video today. Alright, so let's get started on the year. I'm now on the yearly chart of the NASDAQ 100. Alright, so looking at my stochastic 833, you can see here my stochastic 833 still overbought for a long time. So two things will come into my mind is that probably this is an impulse wave in this session, or a next wave, or probably, alright, first, third, or fifth wave. One of the multi-wave, probably one of the multi-wave is being formed in this session, or a next wave is being formed here. Alright, so the higher degree wave count on the yearly chart, this is the first wave of a higher degree, and this is the second wave of the higher degree. Second wave of a higher degree. We are now in the third wave of a higher degree. So if you want to know something today about the NASDAQ 100 index, is that we are in the third Elliott wave of a higher degree. We are not in the fifth wave of a higher degree. So the correction that everybody is talking about is just about the fourth wave of a higher degree that everybody is expecting. It's not the real correction yet. Same thing for the Dow Jones Index. We will see at one point, probably next year, we'll see a pullback. That will be the fourth wave of a higher degree. And then the stock market will go up again one more time to break above the high of the third wave, forming the fifth wave of a higher degree. So today, with the information that we have on this chart, first wave of a higher degree, second wave of a higher degree, we are definitely in the third wave of a higher degree. I need to point out to traders that this candlestick bar, this one here, is not yet closed, because this is the 2018 candlestick bar on the yearly chart. It's not yet closed. And today, it does not yet have, okay, a wick on it, which means a shadow on top of it. It does not have a shadow on it. It may have it at the end of the year, end of December 2018. If that is the case, we will say that the fourth wave of a higher degree is underway if we see a shadow on top of this candlestick bar. But right now, it does not have any shadow at all. So we are in the third wave of a higher degree. That's why the stock market has been going up. People say, oh, the stock market is going to go down, stock market is going to go down. Yes, it can go down a bit, but that will form only the fourth wave of a higher degree. But we are in the strongest portion of the trend, the third wave of a higher degree. Same thing for the Dow Jones or all other major indices. But now, in order to time the market more accurately using the Elliott wave price structure, we need to dissect, so to speak, the internal wave of this third wave, because this is an impulse wave, this is a multi-wave. We need to look at the internal wave of this third wave. All right. In order to do that, we'll go quickly to the monthly chart to see the internal wave. All right. So this is about dissecting, all right, the price action, looking inside. I've done my homework before. I will not dwell on it. If you want to know why, all right, check out other video that I have recorded on the same channel, 24 Elliott Waves video relating to the NASDAQ 100, because I can still have my drawing here. And I was talking about it, blah, 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 why I did not start my first manual wave from here, and I prefer to start it from here. So I will not go back to the same repetition to annoy our faithful subscriber. All I will say to you, looking at the internal wave, feel free to disagree. Some trader will say that from here, some trader, not me, some trader will say from here to here will be the first manual wave of that third wave of a higher degree. I don't want to call it that way, but the disagreement between myself and those traders is not wide at all, because I prefer to call this session only here, this session here, as the first manual wave of that third wave of a higher degree, followed by the second wave, the second manual wave of that third wave, and our third manual wave of that third wave is from here all the way up here, followed by the fourth manual wave of that third wave. We are now in the fifth manual wave of that third wave of a higher degree. So you can see that that fifth minor wave of the third wave itself is being extended. If very fast, I may say 1, 2, 3, 4, 5. So we may say we are now, all right, in the fifth minor wave of the fifth minor wave of the third wave. Are you confused? So from here, this section where we are now, you see the pullback here. This is the fifth minor wave of the fifth minor wave of the third wave. So we are talking about two fifth waves. So the first fifth wave is this one. So from here all the way up here, that's the fifth wave of the third wave. Now we have another fifth wave, which is from here to here. That's the fifth minor wave of the fifth minor wave of the third wave. And that fifth minor wave of the fifth minor wave of the third wave can also be extended. Though today we are saying that we are now in the third wave, that fifth minor wave of the fifth minor wave of the third wave itself can also be extended. So if you think that, George, is a bit complex for me, go to www.24elliottwave.com, click on the fifth wave extension. Okay, so we have an extension of a minor wave of a minor wave. So two minor waves can be extended, all right? Especially during the fifth wave sometime, you may see that the fifth wave itself is extended, which is here, it has been extended from here, has been extended, but its own fifth wave, which is the fifth minor wave or the fifth wave itself, can be also extended. So we are here now, but today with the information that we have, you may say that, all right, probably the third wave of a higher degree will end somewhere here. But we don't want to forget that the fifth minor wave or the fifth minor wave itself of the third wave can also be extended. So one thing that you need to understand, very, very important, because we are talking about the third wave, all right? The only reason why we are talking about the third wave of a higher degree is because the NASDAQ 100 went above this level here. Which level? That's correct. The 138.2% Fibonacci extension level of the first wave of a higher degree. So this was the first trending phase, which is forming the first wave of a higher degree. If it did not go above that 138.2% Fibonacci extension level of that prior high, all right, we will call that move, if it did not go above that level, all right, we will be talking about X wave, meaning that if the price starts coming down from this level here of 6494, if the price did come down from that point, 6494, coming down, we will call this session, not the third wave, we'll call it X wave. We'll be talking about WXY wave, all right? So you may say, George, what is WXY wave? I will say to you, check our video, our playlist about WXY wave, okay? All right? But because it managed to go above that 138.2% Fibonacci extension level on this move out, now we can declare that this move from here all the way up here is an impulse wave. Otherwise, we will call it a corrective wave. I did talk about this before. Some traders already understand that. They may say to me, George, you're talking too much, you're repeating yourself all the time, you're saying the same thing non-stop. George, all right, because you have been following and you understand. I'm speaking to new traders, all right? So this is it, all right? So talking about NASDAQ, we are in the third wave of a higher degree, and we are also in the fifth minor wave or the fifth minor wave of the third wave. That fifth minor wave or the fifth minor wave of the third wave itself can also be extended. The forecast is that when that supposed to be the third wave is finished, we will have the fourth wave of a higher degree, all right, bringing the price somewhere on the edge of the pitchfork tool. You see how I draw my pitchfork tool? 1, 2, 3, bringing the price probably to the edge of the pitchfork tool here before. So the correction everybody is talking, the stock market is over, blah, 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 blah. It's just a fourth wave. We are expecting a fourth wave of a higher degree. And then the stock market will go up one more time, okay, going above the high of the third wave. If it couldn't break above that high, we'll have what we call an Elliott wave failure. So we will have a double top, which is an Elliott wave failure. But the expectation or the forecast today is that we are now in the third wave, and we are also in the fifth minor wave or the fifth minor wave of the third wave. That fifth minor wave or the fifth minor wave or the third wave can also be extended, meaning that the price can continue to go above where it is now, because the price now 161.8% Fibonacci extension level of this first wave. The next Fibonacci hidden resistance level for the NASDAQ 100 is the one, which level? The 200% Fibonacci extension level. But because I don't have enough room up here to show you where is the 200% level, all right, try to draw if you can, or just remember that if it continue to go up more, we need to watch at the level of a 200% Fibonacci extension level of the move of the first wave from here to here. All right? If it breaks above that 200% level, I believe, in my view, that if it breaks above the 200% level, you will find it very difficult to go above the 238.2%, 238.2% Fibonacci extension level of the first wave. So a technical trader must now focus on the market pattern. You see, I draw a red channel here. You see, that's what we need to do now. So the focus is there. We know we are now in the third wave, especially the pullback, and then the fifth wave. But in order to make excellent decision, all right, you want to draw your channel. You see, I have my red channel here. This point, all right, and then we select one point here. We have the red channel. We can continue to project that red channel in the direction of the price, market geometry. I don't want to do it now, but right now you see the pink line here. So I call it this point, somewhere beginning of 2012, all right, and this point here, end of 2014. I draw a pink line. One thing we can do is to draw another line from this top here, this top end of 2017. Draw a line there that is parallel to the pink one. We can do that now. All right, so those lines can help us, or that channel will help us to navigate the price action, so we can make a timely technical trading decision on the edge of the trend lines. So we may trade on the edge. All right. So there's not much to say. So we are now in the third wave of a higher degree, and also the fifth minor wave or the fifth minor wave of the third wave of a higher degree. The expectation that talking about from short term to medium term, the NASDAQ 100 will pull back. It will be a shallow pullback in normal condition because the third wave have been extended. In theory, we will expect a shallow pullback to the 38.2% Fibonacci retracement of the third wave that has started here and will end somewhere here. We'll apply Fibonacci retracement to that session and highlight the 38.2% Fibonacci retracement level. But right now, be aware of that pitchfork tool, all right? And if you start pulling back, watch the median line of the second half of the pitchfork tool. Now that is going now, watch the 200% Fibonacci extension level and also the 238.2% Fibonacci extension level. But there's one more thing. We can divide the upper half of my pitchfork tool. So this is the upper half of our pitchfork tool. You want to be aware of that median line of the upper half of our pitchfork tool. The price coming near it, so we will monitor it. So you can see now it start going up almost vertical. On the yearly chart, we have a solid bullish candlestick bar. I will stay away of selling at this junction until at least the common center line is kaput on the monthly chart, which means break above, retest, or break below, retest then around. So one can also draw. Apology to trade, I don't want to remove my line. All right, so you can draw a common center line like this, around the price, and you may also agree that there is a squeeze. Can we use that word? Squeeze channel. You see that channel? The price is in a squeeze channel. I'll color it. Which color should I use now? I think you can see green, light green. Oops, it's not very clear. Orange. Can you see? It's now in a very squeezed, tiny channel, riding it up. So for day trading, you draw that orange channel. Can you see it? That orange channel. You may also draw the medial. I'm not going to draw it anymore. All right. And then you want to tread carefully on the edge. If it breaks above the orange channel, you can measure the width of that orange channel, project it up. Be aware of the median line of the upper half of the bigger P42. Be aware of the 200% Fibonacci extension and the 238.2% Fibonacci extension of the first wave. We are in the third wave, but we are also in the fifth minor wave, or the fifth minor wave of the third wave itself. In the medium term, all right, we will have the fourth wave of a higher degree, followed by the fifth wave of a higher degree. All right. But there is one more thing I need to mention at this point in time. If the price crash down here very fast like this, all right, we need to be very careful. If it crashes down vertical, I'm talking about vertical, which means this fifth minor wave of the fifth minor wave or the third wave, if the price constantly with one candlestick bar, I'll come back again and record another video to tell you what is happening. All right. But as things stand, okay, everything that we've said so far, okay, is still valid. Concentrate on the market pattern, draw your channel, trade on the edge, be aware of the horizontal key support and resistance level, and most importantly, the trend line and the bigger P42. All right, it will be completely crazy to start selling. That will be a speculative sell, because right now there is no indication or no weakness telling us that the price is going down, because it's all looking good. But before one can start selling, one must have a good reason, which means at least price breaking below the orange trend line, retesting it, or breaking below a common trend line, or exhibiting a kind of weakness before one can start jumping to sell like okay, a very a dangerous, okay, bearish trader. All right, so patience, all right, cautious is very important. For those of you who have been buying and hold, how long do you want to hold it for? All right, so the fundamental traders sometimes struggle with this because they are not very efficient when it comes to timing the market. All right, now this video is for educational purposes only. It's neither solicitation or offer to buy or sell. The general rule that technical traders or investors follow is that if they want to buy, they buy the dip. So the dip that we are expecting is probably a portion of the whole fourth wave of a higher degree. That will be a time for somebody who's looking to buy and hold, which means a dip, all right, and then price resume again going out. That will be a time to catch the fifth wave for bullish traders that want to buy and hold. But for technical trading, day trading, swing trading, well, you know exactly what to do. Look for a trading setup on the edge, all right, and then implement a top-down trading method without okay, cutting corner, all right. So this is the end of this tutorial. I would like to take this opportunity to thank that YouTube subscriber, Raw6, all right, did ask me to record a video about NASDAQ 100 index. So what we are doing this year is very simple. There is a deal that I talked about it last time. Some traders disagree, some traders hate me for that. I said to traders that in everything, money is involved. Though this video is not for educational purposes, I recommend to traders anytime, all right, you want us to talk about one particular American stock or American stock index. I have the data for those stocks. It's not because I'm discriminating other stocks. That's the data that I got. That's the only thing that I can use at this point in time. So you want us to talk about one particular stock and one particular American index, put in the comment section like this person did, and I will record a video. But if we give you excellent tips, all right, I'm talking about professional traders, okay, people who are making real money in the stock market. I'm not talking about new traders that are learning, all right. So those people that are making a lot of money just watching our video, just remember us. You make a lot of money as a professional trader watching any of our tips and tricks. Go to our website, donate something to our website to support the work that we are doing. This is only for people that are making a serious amount of money, all right, in the stock market, watching our area way video, because we are giving it for free. Support what we are doing so we can stay longer, okay? We can hang around, okay, keep doing what we are doing, okay, for a long time, all right? If you have any question or suggestion, please put in the comment section, and in due course, I will be recording another video to answer your specific question. If this video has been truly useful to you, please let us know by giving us the thumbs up. If you dislike it, please mark it down. If you think this is an essential tutorial, feel free to share with your friend on Google+, on Twitter, and also on Facebook. If you have not yet subscribed to our channel, Please subscribe to our channel today. We will be recording more tutorial. Make sure you click on the notification bell or the bell icon, so anytime we record a new video, you will be the first person to be notified. Until the next time, enjoy yourself and be very happy. We are the GSTW24 traders talking about Elliott wave traders, tips and tricks to tame a NASDAQ 100 index. Happy trading to you all, and I will speak to you soon. Thank you for watching.